we are going to discuss financial statement and the balance sheet in a very simple and easy way. This topic is very important for CMA part, so make sure you watch this video till the end. The part 1 external financial reporting decision is very important for your journey start for 15% weight is this unit 1 external financial reporting. Let me start for financial statement, the balance sheet. Reference to the relevant section of the FABs. FAB means Accounting Standard Codification. Accounting Codification, Financial Accounting Concept number and the chapter of the main object of general purpose financial report. The objective of financial reporting means general purpose financial reporting is provide a financial information about the report that is very useful for existing potential investor, lenders, and other creditors in making decisions about providing resources to the entity. Those decisions involve buying, selling, or holding equity and debt instrument, and the providing or setting loans and other forms of credit. The main objective of general purpose financial reportings and not profit entities like non-profit organization includes providing useful information and other existing potential resources provide such members, donors, grantors in making rational decision about allocation of resources to those entities. User of financial information. Who is the user of financial information? Financial information means include existing and potential information. Potential eh, investors, lenders, and other creditors, and the decision they making related to buying, selling, or holding debt or equity instruments, and providing credit. User need information to help them access their expectation about returns such as dividend, principal payments, interest payments, or market price increases, and the amount, timing, and uncertainty that is prospect for future net cash inflow to the company. In addition, make decision about the investing lending financial statement are used to areas of strength and weakness of the company. In it is not possible for accounting information with all information all the users need to make their decisions. User need to access the information for the other resource source as well as an economic prospect is very important for industries company specific information. And let me again for direct and indirect user. But direct user are directly affected by the operating result of the company. And direct user include investor, potential investor, employees, management, supplier, and creditors. Direct user stand to lose the money if the company has financial problems. Financial problems means a company or losses and is direct effect for in the organization. Internal and external user. Internal user use such a manager make a decision for with the company regarding operation and detail in the annual reports making decisions and external user investors lenders decision from the house the company about whether begin to relationship continue relationship and their relationships with the company. External user also includes the investor, advisor, analyst, and current potential investor. That is a note. Financial reports are prepared for the user who has reasonable knowledge of the business, economic activities, and reasonable knowledge for a like a potential investor. The financial statements are interrelated. Financial statements are accurate yet with the each other meanings. They are interrelated. The different financial statements reflect different spec for the same transaction, events, or circumstances. The amount of the change in retained earnings of the balance sheets during the period is equal to net income of the income statements minus dividends declared. Many balance sheets accounts are used to calculate the income statements. For example, fixed asset calculator depreciations. And let me again for now, no one financial statement provide all the information that is useful for making assessment or decision. Resources provide use a variety of information, including information about the asset, liabilities, and equity at the end of period. Comprehensive income during the period, including revenues, expense, gain, and losses, cash flow during the period, investment by the distribution to the owners. Elements of financial statements. Elements of financial statements are buildings block of the financial statements. Elements which elements asset liabilities equity. The US gaps for five parts of like asset liability equities and then current asset and current liabilities, comprehensive incomes of the components of part of by the owners and distribution to the owners, and comprehensive income is equal to then asset and liability change in asset and liabilities, and the other those resulting for the investment by the owners, distribution to the owners, and the components of comprehensive income, revenue, expense, gain, and losses. Then note is very important for a read of your. Then again for general purpose for financial reporting includes full set all the financial statement plus notes with the financial statements are required supplementary information. Notes amplify the information about items in financial statements. The note to the financial statements are used to consider a part of full set of the financial statements. Notes and supplement information are required part of general purpose financial reporting. Financial statements are used under US general accepted principles. General accepted principles is US GAAP. US GAPs and IFRS is very important part for journey for US CA. Balance sheets also guard the statement of financial position and statement of comprehensive income. Comprehensive incomes like income statement and statement of change in stockholders equity, statement of cash flow statement. Recognize of financial statement items. Recognize the financial statements must be definition of elements of financial statements be measurable and be able to depict with the measure with the faithfully present. When the item is no longer meets any one of recognition criteria, it should be recognized that is removed for the financial statement as an asset, liabilities or equity. Measurement and valuation of the items, financial statement items. Measurement in the financial statement is the process of determining how it's recognized the financial statement should be depicted numerical to represent the faithfully. Faithful represent means completely neutral and free of from error. Then we read out for a full paragraph. Now, next for measurement system. The two measurement system is the entry price system and exit price system means the systems are used to for asset or liabilities depends on which system meets the objective financial state. And then start for entry price system. Entry price is the price paid to purchase an asset or the value of what we receive to assume liability in exchange transaction. Entry is price measurement such as also known as historical cost. Is very important for historical cost. Historical cost is get an asset location and condition necessary to functions intent including in the initially entry price. Example for is very important. Readout for property, plant, equipment reported amount paid acquire adjusted acquisition of depreciation, amortization, and other allocation. Then the second readout for all example for helpful. And read the last example I'm reading for the example of specialized manufacturing machines should have high exit value for company. In one industries but low exit value for the company in a different industries. When exit price varies significant between entities for the same asset using a fair values and could be create a misleading comparison between companies. Historical costs provide a common measurement basis. The data better reflects and the each entity investment to gain the productive capacity. If you found this video helpful, don't forget this like, shares and subscribe. And next chapter for a continue for financial statement and the balance sheet. Thank you. Have a nice